Hello, and thank you for joining today's installment of the Voluntary Benefit Shop's Broker Webinar Series. My name is Mike Walker from the Voluntary Benefit Shop, and I will be your host for today's webinar. Chelsea, it looks like we only have a few attendees today, so I think we're okay to allow Rob and Stephanie the ability to unmute if they choose to. Chelsea will set that up so that Rob, you and Stephanie can unmute. And then that way, if you have any questions throughout, you can ask. You can also always enter your questions into the chat box if you have questions as well.
Thank you.
You're welcome. And with that, I'm going to get started. Again, Rob and Stephanie, thanks for joining today. I know it's the middle of the fourth quarter, so it's a crazy time for people. We're going to be probably about 20 to 30 minutes today, and I'll leave time for your questions as we go, but I will go ahead and get started without further ado. So first of all, if you're not familiar with us, again, my name is Mike Walker. I'm the president of the Voluntary Benefit Shop. We're an organization that helps brokers bring the best in voluntary benefits to their clients. Feel free to reach out to us if you have any clients with voluntary benefits needs that you need assistance with. You can see my contact information here, my email, as well as our website. So today's topic is November is Long-Term Care Awareness Month. And, we have all these awareness months that go through, we have throughout the year for different things. And the key is, is not just about the awareness, but how to figure out how to use that as a marketing tool. And so today we're going to talk a little bit about some of the trends in long-term care, but then also a way that we're working with some of our broker partners to use it as a marketing excuse, tool, etc. So first of all, let's give a little bit of background of kind of what's going on in the long-term care industry. Number one, longevity, right? Like people are living longer than they have. In fact, 2 of 3 average 50-year-old people can expect to live to age 80, and 1 of 3 to age 90. So people are living longer. And part of that is like people worry about like what's going to happen to me as I age, particularly when they've had to see their parents go through it, right? And so that's becoming a more and more relevant topic for people, and a topic of anxiety for some people as well. And so if you think about it, one of the reasons is because, again, baby boomers have went through this with their parents, and now my generation is starting to go through it with their baby boomer parents. But 1 in 3 consumers surveyed had provided care to an older parent or relative in the past. And so a lot of us now have experienced providing care or seeing people go through care. So it's becoming, again, like I said, just a more relevant topic. Beyond that, like people want to be able, when they think about it, they want to be able to kind of dictate the type of care that they have, right? And in fact, 78% of people would prefer to receive care in their homes. And that's possible, for people if they have the right circumstances and if they plan ahead. But a big part of that is about creating a scenario where if what you want is to have care in your home, creating a scenario where you can do that without creating undue responsibility or stress on your family member. Nobody wants to become a burden, right? And so some of these stats are very telling. 46% of family caregivers report that providing care affected their personal health and well-being. 53% of caregivers and care recipients reported that they lost income due to the demands of providing care, and nearly 50% of caregivers experience a negative mood, including depression, mood swings, or resentment because of providing care. So that's a pretty high percentage, and nobody, like I said, wants to be a burden. So the key is to figure out how to prepare for your care and not become a burden. And that's what we as advisors, that's what we try to help people understand. 71% of consumers rated stay-at-home care as being a very important part of their long-term care planning, long-term care policy. And in fact, 70% of long-term care claims are for home care. So it is something that people that have long-term care, that they are able to utilize and hopefully do in a way that's not as burdensome on their family. So if you think about it, people really buy long-term care for one big reason, and it's about control, right? It's about control, being able to prepare for the future. Really the same reasons I guess we buy any type of insurance, but specifically for long-term care, people want to be able to, if you think about it, when you get to that point where you need long-term care, or when you think about being at that point, it's scary, right? Because we've pretty much had control of, for the most part, of, taking care of ourselves throughout our life. And then you get to the point where you can't take care of yourself. And that becomes scary because you have to become dependent upon other people and that type of thing. And if that's the scenario, you still want to be able to do so in a way that can be comfortable for you and not, not fill you with anxiety as you think about it. And so people really buy it because they want to have control, maintain their independence, maintain their quality of life, but also protect their assets, right? Like nobody wants to get to the point where they have to depend on Medicaid for long-term care. So they want to be able to protect their assets, and then just overall a sense of security. So those are, kind of all the reasons why why people do purchase long-term care. Now, there's some things going on out there that are changing the marketplace. Like number one, we talked about this, the fact that the population is aging. By 2030, there'll be more people over the age of 65 than under the age of 18. And then the Department of Health and Human Services tells us that 70% of those people over age 65 will need long-term care. So that's a lot of people. Secondly, middle panel here, cost of care, very expensive. The median annual cost for in-home care is about $55,000. Care in a nursing home, about $95,000, and a private room in a nursing home, about $108,000. So very, very expensive. And depending on where you are geographically, your cost may even be more than that, right? So where I am, Baltimore, DC metro area, costs can be more than that depending upon where you go. And then in terms of standalone long-term care options, those options are shrinking, right? Well, there used to be more than 100 different companies that were selling long-term care of some shape, form, or fashion. And so it was relatively easy for people to be able to seek out and get a policy and that type of thing. Well, the reality is now there's very, very few companies that are selling any meaningful number of policies. And oftentimes it's difficult to get. Rigorous underwriting, a lot of health questions, medical exams, family history. It's expensive, all those types of things that create a scenario that are obstacles to people, getting that type of care. So those are kind of all, I guess, problems to a degree. And then there's also a big disconnect out there in the marketplace. And as an advisor, you guys probably are aware of this, but the reality is that not nearly as many people think they're going to need or are prepared for the need for long-term care as they're actually going to need it. As I previously said, 70% of Americans over the age 65 will need long-term care services. Also, the average LTC costs are about $172,000 per person. That stat comes from SHRM. Many people are under the impression that either their health insurance, Medicare, Medicaid, or the Affordable Care Act will cover those costs. Well, we know, as advisors, there's very little coverage for any of those types for long-term care in any of those programs. And Medicaid, maybe, but again, you have to literally have no assets, for Medicaid to really kick in, and people have to go through kind of that shell game of getting rid of assets in order for Medicaid to kick in. And then beyond that, then you kind of lose the ability in some respects to choose the type of care that you want to receive too when you're under Medicaid. And then, in terms of employee benefits, only 32% of employers currently offer long-term care insurance as an employee benefit. That stat comes from SHRM. Now, I think the reality is that number is probably lower than that, because if you think about the people that respond to SHRM surveys, they're larger organizations. And so I think there's a lot of smaller organizations that certainly don't offer long-term care. But still, 32% is a relatively low number. And then the big disconnect comes from the number of people that actually have protection. Fewer than 1 in 30 Americans own long-term care insurance now, and only about 7% of adults over the age of 50 have long-term care. So big disconnect. But when you poll people, particularly executives, it's one of the most requested benefits by executives. It's right after, any type of retirement type planning that an organization offers. The next one or two things is usually long-term care after that. Executives frequently asked about it and want to participate in it, if it's something that's made available. Now, the other thing that's going on out there is that there's this, wave of state legislation that is creating state-run long-term care programs. And so Washington State last year was the first state to enact this legislation that created a payroll tax that was designed to fund a state-run long-term care program. And when I say a payroll tax, it was on employees only, not on employers, but on employees. And it provided really a very minimal benefit. It's a $36,500 lifetime maximum benefit, so a drop in the bucket for total LTC cost. And it really was designed to take a little bit of the pressure off of the Medicaid system. There was some problems with what they did in the state of Washington. Number one, it's an uncapped tax. So if I work in the state of Washington for 30 years, I'm going to pay way more into it than I could ever receive from it, right? Number two, if I'm a high income earner, I'm going to pay way more into it because it's an uncapped tax. And then also, if I live in the state of Washington now or work in the state of Washington now, but then I retire to Oregon, California, Florida, Arizona, Alaska, wherever one may retire to, I cannot access the benefit. I have to live in the state of Washington at the time of need to be able to access the benefit. So that's problematic. I could pay into it for years and not be able to access it. Now, the thing that the state of Washington did do is they gave people an opt-out opportunity. They could opt out of the tax if they could prove by November 1st of last year that they had some sort of private long-term care insurance in place. And so the end result was that thousands of employers scrambled to find an LTC solution that would allow their employees to opt out of the tax. And we helped many organizations in the state of Washington do that. Now, I mentioned the state of Washington because you can see the map on your screen. There's many other states that are following suit at looking at these types of taxes. In fact, we stay pretty up to date on this. The next state that I hear is very likely to happen is the state of New York. And the state of New York, the tax is likely going to go into effect January 1st of 2024. And they are going to allow an opt-out period, but people have to have coverage in place by July 1st of 2023. So July 1st of next year. And so shorter opt-out period, people have to have it in place. And so again, you're going to have companies in New York scrambling to put something in place to allow their employees to opt out. And then, there's other states, Pennsylvania it's being considered right now, and all these other states you see listed on here. So there's a wave coming. It won't just be these states. Ultimately, it'll probably be most states. And so as an advisor, we kind of need to be ahead of the curve to make organizations know about this and make sure that they know how to frame it as an employee benefit that can allow their employees to opt out of the tax. There's a lot of reasons why people would want to opt out of the tax. And that goes back to control again, right? They want to control those dollars and do better with those dollars than just funding a tax. Now, over the years, some of the things that have been difficult, with long-term care is just that it's expensive, right? And so one of the things on the types of solutions we'll talk about today is that these newer solutions provide scenarios where the solutions are smaller, simpler, more affordable, and still provide meaningful coverage, okay, better than what the state plan is going to provide. But it fits into people's budgets, because that's why it's been an executive level benefit for the most part, because it's expensive. So these are plans that really, everyday middle America can purchase, middle income America can purchase, and still derive a good benefit from it. The other thing is that these are they can be programs that are more appealing to young people. So if I'm a young person with a family, young kids, long-term care is probably not my most important need that I'm thinking about. But by planning when I'm young, I'm able to lock in a low rate, make sure it's affordable. And the problem is that long-term care is so far off. So these newer innovative solutions oftentimes combine some other benefits that young people can still see as something that could be relevant to them while still preparing for long-term care in the future. So let's talk a little bit about these type of options. So one of the most popular options are these life with long-term care hybrid products. And there's plenty of carriers that have these type of products. Well, I say plenty. There's 4 or 5 carriers that have these type of products out there that are available as an employee benefit or payroll deduction basis. And as a life hybrid product, what I mean is it's both life insurance and long-term care, combined together in the same product. And so here's a snapshot of how it works. At death, it's going to pay me a benefit just like any other life insurance would. Okay. But it also has some living benefits. Number one, a terminal illness component. If I'm diagnosed with a terminal illness, it's going to advance me 75% of my death benefit while still alive. The remaining 25% is paid to me at time of passing, or paid to my beneficiary at time of passing. Now, down on the bottom, you'll see these living benefit riders or long-term care riders. Different carriers call them different things. But essentially what that's going to do is if I'm in a long-term care situation, it's going to advance me 4%. With most carriers, it's 4% of my death benefit for up to 25 months of needing that care. After 25 months, most carriers offer an extension that would extend that long-term care or living benefit for an additional 25 months, so a total of 50 months. And then again, with most carriers, it still provides a paid up death benefit. Even if I exhaust all 50 months of the long-term care, my family members would still get a death benefit. Oftentimes that benefit is 25% of my original face amount. With some carriers, it can actually be up to 100% of my original face amount. But those are, the typical product structure.
Can I ask a question?
Sure.
I'm sorry, since there's only a few of us, I figured I would just butt in now.
Yeah.
If that's
Yeah,
appropriate.
go ahead. Go ahead.
This is Stephanie Gonzalez. I'm with a broker's office. I'm an underwriter too. So what I'm trying to understand here with this particular slide here is so I understand, how life insurance works. I understand how long-term care works. This hybrid program, the correlation I'm missing is I get terminal illness and how that benefit, works if you're still living, etc. The living benefit rider, is that now targeting the long-term care benefit, and we're no longer talking about the life insurance benefit?
Yeah, so the living benefit rider is synonymous with the long-term care benefit, correct? And so, Stephanie, the trigger for that living benefit rider or that long-term care rider, and again, different carriers call it different things. The trigger for that is the inability to perform 2 or more of the 6 activities of daily living. Okay, so if I have the inability to perform 2 or more of those 6 activities of daily living, that's going to kick in my long-term care rider, and it's going to pay me that for whatever the duration of that long-term care event or the limitations of my policy provide for. Does that make sense?
It does. It does. I wasn't sure. I feel like we were like jumping off the ship from the life insurance, and now we're jumping onto the long-term care benefit ship. And we just need to be I need to understand at what point the long-term care benefit initiates, that's what I wasn't understanding the correlation. I think I get it. It's a hybrid because frankly, I'm finding it very difficult to find a carrier that even sells long-term care any longer. And that would be obviously on a standalone basis. But yeah, I think the only option I'm hearing right now is that there are just the long-term care riders on life insurance policies. Probably, yeah, go ahead.
I was going to say, and that is that is the most common solution out there, is the life with long-term care hybrid products. And there's some advantages to them as well as some cons as well. Like they're not as flexible as your traditional long-term care, like they're not as customizable as your traditional long-term care. But from a standpoint of some of the pros, and I actually have a slide on this, so I'll get to it next.
Jump ahead.
That's okay, Stephanie. Hey, but I think this slide also helps you understand kind of the structure a little bit. Okay. So the slide that you see in front of you now actually has some dollar amount examples on it. So let's say I was the employee and I chose a $100,000 policy. And let's say I pass away and I never need long-term care services. I'm on the golf course, I have a heart attack, I pass away. Then if I have a $100,000 policy, it's going to work just like you would expect life insurance to work. It's going to pay $100,000 to my beneficiary at that point in time. If I have a terminal
life policy?
No, that is the life policy. It's going to pay $100,000. That's my life policy, $100,000 of benefit.
Got it.
Okay,
yep.
That's okay. So now if I have a terminal illness, if I'm diagnosed with a terminal illness, it's going to pay me $75,000 right away. That's 75%. And then the remaining $25,000 would be paid to my beneficiary at time of passing. Okay. Mm-hmm. Now, the bottom part down here is your long-term care. If I'm in a long-term care situation, meaning I have the inability to perform 2 or more of these 6 activities of daily living, it's going to pay me 4%, or in this case, $4,000 per month for up to 25 months. After 25 months, Then the extension kicks in, which is going to extend that benefit, that $4,000 per month for an additional 25 months. And even if I have exhausted all of those benefits, it still pays a death benefit to my beneficiary. In this particular example, 25% of my original life insurance benefit, which in this example would be $25,000. Okay. Okay. So you can see with a $100,000 life hybrid product, with this particular product structure, my family and I can actually derive $225,000 of total benefits from the plan in a scenario where I needed 50 months of long-term care and then passed away.
Right.
Okay. Does that make sense? Does that make sense?
Yes, got it. Yep.
Okay. Now, Stephanie, it's important to realize that these numbers could be higher. Like I could choose more than $100,000 worth of coverage. Some of the carriers you can actually choose up to $500,000 in coverage, right? I just use 100,000 as a round example to make it easy to understand. Okay.
Are there multiple vendors that you work with that sell this?
Yeah. So if you look at the bottom of this screen up now,
Okay.
yeah, these are the 4 carriers that have really viable products in this industry. Transamerica, Chubb, Allstate, Trustmark. Pros and cons with each one. One of the things that we do is if you have a client that wants to look at this, we go out to the marketplace, we secure the proposals, we apply our block underwriting offers, and then we come back with a chart that has the pros and cons highlighted of each carrier. Some will have higher guaranteed issues, some will have different provisions for the extension, some will have higher interest rates on the cash value. So we kind of highlight all those things so that you and the client are able to make a decision that's best based upon their specific desires for that type of plan. Okay. Some of the reasons why the hybrids are so appealing is that, number one, when compared to standalone long-term care, with standalone long-term care, I only receive a benefit if I ever need long-term care. But with the hybrid products, I can receive a benefit either from life insurance or long-term care. Okay. So if I have the policy, one way or the other, me or my family are receiving a benefit. Like I said, if I have that heart attack on the golf course and I never need long-term care, they're receiving the life insurance benefit. If I'm in a scenario where unfortunately I do need long-term care, then we're receiving the long-term care benefit, or both. Also, the hybrid. Go ahead, Stephanie.
I'm sorry. Are these life insurance policies term? These are just strictly term policies that it is attached to, or can it be whole life?
Yeah. So Stephanie, some are term. Like Chubb is a permanent term. Transamerica and Allstate both have whole life options and universal life options, and Trustmark has a universal life option. So it's all three. All 3 are options.
Okay.
Okay. They also all offer guaranteed acceptance underwriting. So if someone's at work, they can receive the benefit. They can get the policy without having to answer underwriting questions or get medical exams or anything of that nature. So it is guaranteed issue. Typically, they're more affordable plans and have level premiums because of the flexibility. Like people can choose a dollar amount that fits their budget. The universal life and the whole life options do accumulate cash value over time. So that's a nice feature. They are indemnity products. So they pay a benefit regardless of the cost of service. Okay. And some of the carriers actually have the potential to pay claims during informal care. So informal care is, for example, if I'm caring for my spouse or I'm caring for my parent and I'm not a certified caregiver, that's called informal care. So both Transamerica and Trustmark have options that do cover informal care as well. Sometimes that's important to a client. So just know that is out there. And all of them are portable. So people can keep them forever, keep them into retirement. Rate stays the same typically, that type of thing. Any questions on that at all?
Can you explain to me one more time what informal care is? Is that like at home, you mean?
Yeah, it would typically be at home, Stephanie, yes. And it would mean, like, for example, my mother cared for her mother for the last 5 years of my grandmother's life. That would be informal care. So it's not a certified caregiver, but like a loved one that's caring for you. That's informal care.
Okay, thank you.
Okay. Yep. And some of the carriers cover that. So in that scenario, the only trigger for benefits, Stephanie, is it doesn't have to be a certified caregiver. The only trigger for benefits is just the doctor has to certify that I cannot perform 2 or more of those 6 activities of daily living. As
Yeah,
long
I
as
like
that's
that.
happening, my
Yeah.
benefit is paid. Okay.
Yeah, thank you.
Now here's kind of what the sample underwriting looks like. And now this is going to vary depending upon the size of the cases or the size of the case and which carrier we're working with. But in general, this is, pretty standard as to what we get. You're going to get about $150,000 worth of guaranteed issue coverage. Everybody can get that. Some of the carriers have conditional guaranteed issue, which means they just answered, 2 or 3 simple health questions. And then people can get above that by just answering a few additional health questions. Okay. There's oftentimes a guaranteed issue for spouse. It can be as high as 50,000 on some cases, but at least 15,000. Conditional guaranteed issue 25,000, and then simplified issue 100,000. Now, one of the carriers will actually let us go up to 300,000 for spouses, but more times than not, the carriers are keeping the spouse coverage to about 100,000. And then children or grandchildren, they're guaranteed issue typically at 20 or 25,000. Now, one thing that's important to point out is that remember that, in most states they have that extension of benefits. So $150,000 of the coverage is actually the equivalent of $300,000 worth of long-term care, because the long-term care benefit is actually double the life insurance benefit. Okay, does that make sense?
Yep.
And then here's an example of what underwriting questions look like. Guaranteed issue, there's no health questions. It's just basically one question: are you actively at work? Conditional guaranteed issue, typically 2 questions. Last 6 months, have you been hospitalized or missed more than 5 consecutive days of work? And then there's an AIDS HIV question. And then there's also height and weight. If they want to go simplified issue, if they want above the conditional guaranteed issue amount, they answer height and weight. And then there's kind of a catch-all question: have you had any of these in the last 5 years, basically? So remember, guaranteed issue, no questions at all. They only need to answer questions if they want to go above that. If for some reason they went above it and they couldn't get an amount above it, they would still be able to get the guaranteed issue amount. Here's kind of a snapshot of, we've put this product in thousands of clients over the last few years, but here's a snapshot of some different types of clients. So you can see large firms, small firms, blue collar, white collar. We've done well with this product and all different types of organizations. It really just comes down to, creating a good engagement and education strategy for the employees. And that's one of the things that we specialize in. Here's a couple of case studies. Again, this is a blue collar 350 employee trucking company. This is one of the cases we did in Washington State. End result is 104 people enrolled. It was about 171,000 in premium, which resulted in almost $70,000 in compensation, for the broker that we did the case with. Here's another one, a 650 employee defense technology firm, 151 enrolled, did about 212,000 in premium, which again resulted in about $85,000 in compensation to the broker that we did the case with. 400 person financial services firm, 75 enrolled. We did about 220,000 in premium, which again resulted in about $88,000 in comp to the broker. Wow. 75 person HVAC company, 27 enrolled, 33,000 in premium, about 13,000 in comp to the referring broker. And then, even smaller, 23 person engineering firm. We did about 16,000 in premium, which resulted in about 6,000 in premium, in compensation to the broker. Any questions on that at all?
No.
Okay, just a couple things on what we do in terms of engagement, right? So we create an employee communication campaign that can go out via email, text message, voice recordings, digital postcards. We create digital postcards, digital resource centers. We can conduct both live and recorded webinars. We can even do on-site education if it's an organization that wants that. That's become less common over the last few years, but we can certainly still do that. And then we create these digital resource centers, which are pretty neat, I think. I'll show you an example. This is an example of what an employee email looks like. And this is a Transamerica one, but it could say Trustmark at the top or Allstate at the top. It'd be the same format. And so this is the type of email that goes out to an employee to start to engage them prior to enrollment or during enrollment. And then they click on this Learn More, and it takes them to a resource center that looks like this. And it's got videos about the plans in it. And then if they scroll down, it's got some stats about life insurance and stats about long-term care. It's got a long-term care insurance 101 video so they can learn about long-term care. And then there's a little story about informal caregivers here and what that is. And then down at the bottom, there's some things that are specific to them, their underwriting offer and how their plan structure works. And they can also, there's generally a link up here where they can schedule a call with a counselor, and the client logo would go up here as well. And then when it comes time to schedule, they just click a link here and it takes them to a spot to schedule their call with the counselor. And typically the client logo is up here as well. And they pick a time when it's good for them to do a call when they can ask questions or review the plan and that type of thing. So that's kind of how that works. And then here's some of the reminder emails that we have go out throughout enrollment, just kind of like eye-catching things that gets their attention. And then again, when they click here, it takes them to that resource center so they can either learn about it or schedule their call to talk to a counselor or whatever they want to do. So, enrollment options include on-site counselor assisted, call center counselor assisted, or even platform self-enroll, depending upon, their BIN admin system and that type of thing. So a lot of different options for enrollment. Any questions on that before I wrap up?
I do. Do you work with Enrollment Portals?
Yeah, certainly. So Stephanie, some of the portals work better with the product than others, and better with some of the carriers than others. So we can certainly provide advice on that and help with the setup of that as well. If it happens to be like, for example, if it's a client that has ADP, none of the carriers or products work so well with ADP. So generally we advise if it's ADP to do the enrollment on a separate platform that we have set up. It can link into ADP and then we can feed the results back into ADP post-enrollment. But most of the carriers can work with eNav and Ease and things of that nature. So we do work with them and we provide, we can help with the setup of that and that type of thing.
So you do work with Employee Navigator?
Yeah, all of those carriers we listed are available on Employee Navigator, correct? Okay. Now, one of the things we talked about, at the beginning is like how to use all this stuff to really help, promote, this product and, especially during November LTC Awareness Month. And so one of the things that we do with some of our broker partners during the month of November this year is we're doing LTC Awareness Month webinars. And so we have a series of webinars that can go out to your clients for them to reserve a spot on a webinar. And so this is an example of one of the emails that goes out. And it basically just talks about like long-term care and the costs and, helping employees and employers prepare for that. Announces the 30-minute webinar. Attendees of the webinar get a $10 gift card to either Starbucks or Panera. So they get a thank you for their time, regardless of whether, they elect to, and to proceed with the benefit. Just for being on the webinar, they get that. And so they just click the link and they can choose a time to register for the webinar. And then again, we have some like little reminders that can go out to employers as well that look like this as well. So similar to the employee reminders, but it just click there to reserve a seat for the webinar. And so that's kind of like the webinar series. And then also, or the email series. And then also there's one here that talks about, the new payroll taxes that many states are looking at and learn how to help your company and employees prepare for that. So all are different kind of hot buttons for people to get them to join those webinars. The way we typically set it up is that if you're interested in, having some of these webinars for your clients, we work with you to pick specific dates that would be specific to your clients. So your clients aren't on there with other brokers' clients or anything. The dates and times are specific to your clients. Sometimes the brokers are on at the beginning and kind of do an intro and then introduce us and we run with the webinar. Sometimes the brokers aren't on it because they have other things going on in their schedule as well. But if that's something that you're interested in, just reach out to us and we can, help you get set up with the times and that type of thing. Basically, here's kind of the steps. If you decide you want to do, the webinars, whether it be during November for Long-Term Care Awareness Month, or you want to do them, at a different time, we basically agree on the dates and times. Typically, we're choosing, 3 or 4 dates. We'll do a call with you just to kind of educate, on what's going to be discussed and how the process is going to work. You put together a list of who you wanted to go out to. We give you the templates so that your office can send out the emails, and then we give you a list of people that registered, so you know who selected to be on it. We host the webinars. We provide the gift cards. We give you a list of everybody that attended. And then interested clients, we provide the due diligence for them. And then, if they move forward, then we, move into that implementation process. So that's how it works. Does anyone have any questions at all? Do not have to enter them into chat. You can just ask.
So Rob and I should be expecting a Panera or a Starbucks gift card for participating today. No, I'm kidding.
Hey, we can certainly do that for you. Which would you prefer, Panera or Starbucks?
Panera.
Panera. Okay. Well, Chelsea will make sure Chelsea's on as well. She'll make sure that we get that for you. Chelsea can make sure that we get that for you. So very, very much appreciate you being on here today.
Yeah. Thank you.
And then
very helpful.
And so just let us know, Stephanie, if number one, if you'd like a webinar series, or number two, if you have any clients that you want us to, put together, the proposals or the due diligence for as well, or to talk through it with them. If you have anybody like that, just let us know. We're typically able to turn them around. If it's a group that's under 100 employees, we can turn it around in a few days. If it's a group that's over 100 employees, it's a little more complex for those because it's more carriers involved. We typically take 2 weeks to turn those around, just to kind of give you a frame of reference. Okay.
Sure. If I may, real quick, and I don't know if this is the forum for this question, but do we need to be concerned with appointments with these particular insurance carriers if we've never done business with them before, or?
We would get you appointed prior to the business happening. Correct.
Okay.
Yep, we would get you appointed with those carriers.
Okay.
Last thing I'll leave you with is don't forget our upcoming webinars. October 27th, we have Mike Usiak's organization, Will, is going to be doing a webinar on the balancing act of parenting while working. Okay. So they're going to be doing a webinar on that. That's kind of an interesting new, benefit that's out there. So be sure to check them out. And then on November 10th, we have Allstate on to talk about, they actually have a new Life with Long-Term Care program. So they're going to talk about their new product structure on that particular webinar. And they'll give us a little bit of insight into what's going on with some of those states that have proposed the long-term care tax, and give us some updates on that as well. So those are 2 of the upcoming webinars. And if you need anything else, again, here's my contact info. You can reach out to us for anything that you need assistance with in terms of voluntary benefits. And specifically, let us know if there's clients that you're looking for something on Life with Long-Term Care with. Okay?
Thank you very much.
Anything else for me today? Okay. Hey, thank you very much. Rob, you were quiet, Rob, and I know that you're not usually quiet, bud. So
I was told to be quiet.
Okay. Okay. Chelsea told Rob to be quiet. Rob, we go way back with Rob. So
you're good. Everything was good, Mike. Thank you.
Appreciate it, man. Thank you, Stephanie. Thanks for all your questions today. Great questions. And just let us know if you need us.
You're welcome. Thank you. Have a nice day, everyone.
You too.